Joining us right off the bat is Rick Brooks, an editor with the Money and Investing section, with a fascinating story in today's Wall Street Journal. So JP Morgan, the venerable Wall Street bank, was downgraded by this somewhat secret Washington evaluator of banks. This almost never happens, and not only that, we never find out about it. What's the latest on this story for JPM?
Yeah, sure. First, thanks for having me. This is a scoop by Dan Fitzpatrick, who covers JPM, and Joanne Lublin. Yeah, there is a very well known among bankers a crazy acronym called CAMELS, and CAMELS is each of those letters stands for a particular thing that the regulators are obsessed with. The M in CAMELS is management, last week at the Senate hearing on the London whale, Senator Levin let slip that there had been a problem in the CAMELS assessment of JPM. He wasn't real specific about what that was. The revelation of our story today was that the M, the score in the M, was downgraded in July 2012. And as you said before, it's extraordinarily unusual for these downgrades to become public. We've reported only 2 previous ones since the beginning of the financial crisis, at Citi and at B of A.
And who runs this? I mean, ultimately, what is the U.S. body that's in charge of managing this?
In this case, it's the OCC, JPM's principal regulator for the banking, for its banking operations. But again, what sets JPM apart from B of A and Citi is how do I say this delicately? JPM's reputation among analysts, investors, general public, the White House, is that it is a very well-run bank, in spite of hitting or at least having glancing blows with some of the same icebergs that Citi, for example, really ran into. Yeah. Now we know this downgrade related to concerns about the company's management and board. We know that the London whale mess was a factor in that. There's lots of things we don't know, such as, has JPM remediated those concerns sufficient so that the OCC said, okay, we're happy now? We don't know. But again, the last week's hearing and the fact that we've got this revelation, this story now, again, it sort of re-raises, amplifies, makes even louder questions that the whale mess.
I mean, that's amazing. I mean, here we are, months and months and months. Every week there's a new development, whether it's the Senate hearing you mentioned last week. Now we have this 1 to 5 banking scale change. This thing, it seems like JP Morgan has tried to push, and it just won't go away. And because it raises a host of other questions about how they run their business, right?
Exactly, that's exactly right. I think they have a series of times since the whale mess exploded, sort of gone like this. They have, they more or less sacked or ran off Ina Drew. The traders who are involved, they've made change after change after change after change. Jamie Dimon, the CEO, has very carefully but explicitly said, I'm the CEO, I'm ultimately to blame, but basically they did it. And that is a strategy that has been successful so far for him. But you're right, this is this thing that will not go away. Now, what happens next? Who knows? This is a company like other large banks where the question of should there be a separate chairman and CEO keeps coming up. Those questions have been raised by what you would call sort of the typical rabble-rousers outside the mainstream of large institutional investors, but those are questions that more big investors are becoming open to, simply to just sort of make a statement.
Interesting. And these are questions that here at the Wall Street Journal we make sure to answer. Please make sure to follow everything that Rick's team has been all over from day one in the story, and will continue to be all over.